Hello, YouTube. The S&P has given us a couple of yellow flags, but we finally have a red one, which is what we talked about yesterday. Not only a daily lower low, but also closing below the previous daily low. We can also note that we have 2 days of lower highs, 2 days of lower lows, and we also have a loss of our uptrend. Why does this matter? Well, because we've been talking about this story for quite some time. When we stop going up and we start going sideways, we're watching for where we're going to find that relative support. So today we really just want to go through and make sure we're prepared for the close of the week, which is going to be tomorrow, because there is a lot at play. So again, losing the uptrend here is the first red flag. We look over here to QQQ, and I've already revised this uptrend because the first one actually goes from our low. Let's use the magnet, make sure it's nice and clean, go from our low. So all this means is that, let me just snap this up here. So let me remove the magnet now. We can just note that the first time on QQQ, which was our template for right now, we're going higher, we stop going higher, so we revise the uptrend just like we do here, we hold it. So on QQQ, the first thing we did was we were holding the first uptrend, bounce, 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 and now we have this sideways action here where we can't quite clear the high, we're holding the previous top, but we're not going up on our first angle of ascent, which means this first uptrend. So now that we've lost that, we remove it, but we also note that we've lost the second one here. So that's like not good. What does it mean? It means our momentum is starting to wane. We're still going up. We're still above the 200, which is the black line, still above the blue, which is the 50 DMA. We're still above our long-term uptrend, which is off of our October lows, but our short-term momentum is starting to wane because this uptrend is not as strong as it used to be. It doesn't mean it's over and out. There's one more thing we were looking at here, which is the hollow versus full candle. And what's really important here is just that most of these candles are hollow. And what does that mean? We're closing higher than we opened. So we're not closing by much below yesterday's low, but we did. Looking over here on S&P, what do we note? Same thing. It's mostly hollow candles inside of here. So they're mostly hollow, which means we're mostly closing higher than we opened. And I think I know the reason why. So just stay tuned with me. Stay tuned for a few more minutes and we'll jump straight into that. I'm going to ask you for a huge favor, please, and thank you, though. If you could, consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. All right, so we talked about the yellow versus red flag. We talked about the seasonality chart. We're not going higher into greed, even though we're getting hollow candles or higher closes. We're ticking down from 67 to 64. It's not a huge move, but it's notable to me. I want to see us either getting volume on the chart, which is what I talked about, but not on a red day, or I want to see greed push higher. I want to see the squeeze continue. Well, because good news for earnings is not being received as well as bad news for earnings. Tesla down 10, T-Mobile down 10, NVIDIA down 3 without earnings, Cisco down another 3. So that's important. So if now we look here to the net effect we have from Netflix versus Tesla. We went over these on Tuesday and Wednesday, respectively. We note that, Netflix here actually filled this daily gap going into earnings. So that's like pretty strong. So it was down as much as 10% on the initial earnings reaction. It came all the way back up, opened at about 320. And then today we got a gap down, pump up, fill the gap, and sell off a little bit. So Netflix looks like pretty strong here. If it's going to continue higher, let's go to get over that 50 DMA. And let's see a retest up closer to 350. The volume's not really impressive either, but again, price is king. Volume just confirms the move. Looking over to Tesla, let's go back to those full candles for those boomer eyes. So if you guys wouldn't mind smashing a thumbs up as a thank you, I would greatly appreciate it. So Tesla, on the other hand, was actually hovering around near flat, and then just sold off. It managed to only really test its relative low right here. And if you remember from yesterday's video, there was two patterns we were talking about. We were talking about the potential for a short-term IHS, which is this pattern I outlined right here in yellow, or there was a massive M being formed. M for what? More downside. So there's the first, oh no. And because we've already poked below the mid-range on the M, again, M is an opposite W. So if we go 1 divided by Tesla, what do we note? Oh, okay. Well, this is easier to look at. Well, yeah. Do you think it could go higher? It's bouncing up its 50 MA versus rejecting. This is a bearish chart. It's the inverse. So like it doesn't look fantastic here for Tesla. It's not over, but it is below the 50 weekly. It is below the 200 weekly. It is below the 200 daily. It is below the 50 daily. And we also have a death cross that formed a year ago. And then we got the rejection, which means momentum is actually to the downside for Tesla. Tesla is not the whole market, but It's not a good omen. It's not a good signal. We got Goog up one, but otherwise, like it's mostly red with a couple pockets of deep red. All right. So now that we got Netflix and Tesla out of the way, they both beat earnings, by the way, but it's the forward guidance that really matters. The market is a future discount mechanism, and sometimes it rewards and sometimes it punishes. Tesla looks like it's doing a pricing war, and Netflix is just like, hey, well, we're just going to buy back our stock. So investors like that. We also had some Fed speakers today, like Waller, Mester, Bowman, Bostic, Harker, blah, 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 right? More of the same, higher for longer, still got work to do, yada, yada. Nothing really new. We got one more, and then we go into the blackout period. Blackout period just means they can't talk anymore. So something I mentioned before this week was that it's options expiry. So if we look here at S&P, I mentioned two areas, 410 and 414. And these areas were important for me just because they look like max pain. You can note I have some levels identified here, which just means that's where there's volume. It's also what I think is notable for open interest. 410 or 414 was my base case. There was also a monthly expiry today, so they definitely chopped it up, right? We had some big swings today. So, right, gap down, pump up, sell it off, chop it up into the close, and then pump it again. It was a violent day today. So what does that mean? Well, they're probably burning premium. Burning premium just means that even though we're closing down by about 83 cents, just look and see what happened here. Sorry, we closed down by $3. Well, we're roughly where we closed. Let's call it 410. The puts gain 50 cents. The calls lose 250. So if you lose 250 and you gain 50, it's fantastic if you're the one selling the options. If you're the one holding onto these, it's not so nice. You lost $2. Oh, yeah. So if we go back here to the S&P, we note that let's go back to Hollow because it's a little bit easier to look at. Let's delete everything again. So on Tuesday, as we're getting closer to OPEX, which is Friday, I think, again, I'm not sure, but I think we're going to close at 414 or 410. And there's a reason why we could close at both, but we close, so we get to 416. That's 2 points above 414. Yesterday, we open at 412, which is 2 points below 414. But both days, we close out right at 414. And then today, we push down to 410.27, our high of the day, 413.7. So that's pretty much a rejection off of 414. And remember, if we've been going up, like there's a lot more for the index, I'm meaning S&P, there's a lot more calls to burn going into here than there are puts. So if we understand the motivation, I believe it's going to be either 410 or 414 tomorrow. And it could be right in the middle. I could be wrong, right? I'm just a human. I make mistakes too. I've been pretty good up till now, though. And the reason why this matters is because what's going to happen to our weekly chart going into the weekly close here. So we note that we got 409.7, which is that key area I talked about. It's the big pump. Our low so far is 410. So we've held on to that 409 with a back test, but I'm not sure we're going to reclaim into the close this 41192. We're over it in post market or after hours. We're below as of the cash market at 411.88. I'm not entirely sure. So what do we have here? Well, we got a higher low, higher high this week, but we got a failed breakout. So this is not good because let me bring my lines back. We look here to QQQ. I showed you on the daily chart, QQQ is really going sideways. We have that same thing here, higher low, higher high, but it's a failed breakout. And the reason why it's not good is because when we look here to our monthly chart, we got a monthly failed breakout on QQQ. That's not good. We've bounced off our relative monthly high in February. And now it's like to be determined. I think we're going to get a big move higher to about 334, like I mentioned before, or back down to like 290. So it's going to be like a big move. And the one thing that's not confirming yet for the bears, and I've been providing bear updates for, I don't know, like 3-4 days now. Going into the final hour, we were below. We weren't below. We were right around 409.7. That's our monthly high. That means we're in a monthly higher low, monthly higher high over the previous monthly high. On the monthly, that's bullish. On the daily, I showed you how we have the opposite forming for the reverse. So the daily is shifting the momentum. And meanwhile, over here on the monthly, we don't have S&P back below here yet. ES is flirting with it, which is just the futures. But let's keep it simple. Let's look at SPY and QQQ. QQQ is below. S&P is not. So we're going to need to see that on a monthly candle close. And because it's 409.7, it's really close to 410. Which means if 410 is max pain tomorrow, we could poke below. We could close below. We can also snap back. So yes, we can go up, we can go down, or we can go flat. Let's look at two more quick things here to wrap it up. So I'm also looking here to the last 30 days, or going back to March 20th to April 20th, roughly the last 30 days. Happy lettuce day to everyone too, by the way. What I'm looking at here are options that are worth more than 100,000 that have not yet expired. So for SPX, 15 billion. Over here we got 8 billion calls. For SPY, 2 billion puts, half a billion in calls. It's just it's high. We look at Tesla. All right, well, 3.2 billion for Tesla and 300 million, which means they don't want it up. They want it down, and the Bears are winning. They're going for it. IWM 1.5 bill on the puts. On the call side 122. That's a 10x as well. Amazon, you don't even see it on the top calls. So it just means people are betting the market's going to go down. So just going sideways like this, that's extremely painful. For single stocks like Tesla, at a certain point, they can't hold it up. So what we want to ask ourselves is whether or not Tesla is a leading indicator for the broader market, or QQQ and SPY, which is going to go lower because that's where the option buyers want it, or if they're going to manage to just prop it up, prop it up, prop it up, and then either jack it up, or after the puts expire, then let it go down. All right. Thank you so much for tuning in. I encourage you to watch the weekend deep dive now queued up here on the left-hand side. If not, thank you so much for watching, and I will see you tomorrow.